Hey, top of the day to you guys. This is the Certified Financial Platinum Services midweek check-in, and I'm super excited to bring this young lady to the line. She has a huge heart of gold when it comes to financing. She's a tax advisor, financial accountant, over 25 plus years. Has an office out in Decatur, Georgia, where they say is greater. This lady knows all the facts when it comes to finances and taxes. She's a serious person about helping other people. She loves to have fun, but she's dead serious about this money. So with that being said, please y'all come off mute. Y'all actually come on camera and give a round of applause for this lady who's taking a short sacrifice to help everybody have a long-term gain, Miss Sandra Burton. Yeah.
Absolutely. Absolutely. I'm so excited. You guys, when I tell you this right here, this presentation, before I even get started, Bernard, I want to first of all say thank you for that warm welcome. You know, this is definitely going to be one for the books. It's amazing. You did an amazing job of introducing me. The thing about it is, the reason why I'm so excited, because right now, when I tell you the jewels that I'm about to drop on everybody, is it safe to say, I know this in the beginning, I know that some people are going to jump in the middle. However, it was so much information. Guess what? It's going to actually be a part 2 of this. So if this is something that like is intriguing you, or if it's something that right now, you know, you're kind of like on your seats, you know, waiting like a cliffhanger, and you know there's other people out here that need to see this information, especially if I want to say the younger generation, definitely tune in. So without further ado, I'm going to go ahead and start sharing my screen so we can get started with the people that actually showed up on time. How about that? So give me a thumbs up if you guys can see my screen and everything is coming through clearly. All right. So let's go ahead
and ma'am.
All right. So of course, this is the 2024 mid-year tax strategy session. We should be having these really, and now that I've gotten it, I know I'm probably going to have these probably quarterly. So now you're not at the year end of actually getting things done. So without further ado, let's go ahead and get started. First of all, for those of you who don't know me, I'm Sandra Burton, like he said in the beginning. I'm a professional accountant. I've been a tax strategist, licensed insurance agent, business consultant, now going on 28 years. It is actually officially 28 years this month. So this information I'm going to bring you, can you imagine now somebody almost 30 years of experience, meaning that in the areas of finances, in the area of accounting, been there, done that, about to present? Absolutely. So let's go ahead and get started. I thought about it and I said, okay, let's go ahead and let's do some type of definitions of the actual terms. So when you're thinking of tax planning, tax preparation, tax resolution, I'm going to stop sharing for right now, because what I want to do is I want to go ahead and kind of tap into the audience. When you hear those words out there in just basic, you know, people are talking, okay, girl, I'm a tax preparer, or girl, I do tax planning or tax resolution. Like I said, I want this to be interactive. How many of you guys have heard of someone being a tax planner? They're not saying they're a tax preparation person. They are a tax planner. So come off mute if you've ever heard that term in anything you're dealing with.
I've never heard of a tax planner.
Letitia?
No, I haven't.
All right, but
I've heard some people say that before.
This is before,
in January,
before Sandra, no.
Right, but in January through April, how many people do we see saying they're a tax professional or tax preparer?
A lot.
Just from a show on your timelines, how many people y'all see? Everybody, right?
Yeah.
It come out like all of a sudden you see them working at Kroger's, the next minute they are a tax preparer. Jade, I see the person behind you laughing. It happens. It comes out. However, the one thing about that is the IRS does not regulate that word. Believe it or not, if you're 18 and above, guess what? You can go on and be a tax preparer. No education, nothing is needed. For real. So what I want to do is I wanted to stop because I want if this makes sense, I want you to come out here and I want you to be educated. So a tax planner is the person that actually works with you to do some strategic planning on your actual finances, what you're making, what you're spending. It's more of a planner. So in layman's term, I know Bernard is always getting on me saying that some of the times I talk where, people can't understand me. So a planner, everybody's heard of a wedding planner, event planner, those planners, right? So just think of your tax planner. She's planning on what you're making, right? So the tax preparation person has to come in behind this person because now we're preparing what you've already planned for. So is it safe to say if everybody now, everybody from this Zoom has automatically heard of a preparer but hasn't heard of a planner, how am I preparing something that I never planned for? Right? All right, like for real. So, and the last one is the one that you guys, you know what? You don't want to be in tax resolution because this is the part where now that word audit, review comes up. So all three of these people right now are three different people. So like I said, I want you to leave here with some type of education and the fact that we already hit it on the first slide, that nobody knew what these three people are. If you don't have these two in your life, guess what? You're not living. So what we want to do is I want to go ahead and get started because like I said, I'm not going to be long, but I want to give some information that is useful. I always like to drop real life scenarios. The name has been changed. Her job has been changed, but guess what? The money and everything else is not. So stick with me for a while. So right now we have Kimberly Nelson. She works for Coca-Cola. Her salary is about $65,000. She's a single female here in Atlanta. She drives a 2024 Camry and a 2-bedroom apartment. Come on mute if you've met this person. Come on mute if you know somebody like this. Come on mute if it's safe to say that if she's 30 and she's making $65,000, is she living a good life? I literally want to make this where it's interactive. $65,000. She's making $65,000.
I feel like you can live a good life with $65K a year.
Okay.
Especially if she's by herself. Yeah.
Yeah.
Okay.
No
This
kids.
is gonna be so good. Anybody that know me. This is gonna be so good. I can't wait. Y'all, I can't wait. Look, Jay, you laughing. I can't wait though. I can't wait. So I'm gonna share again. Hold on, y'all. Hold on. Share again. Let's go back to Kimberly. Okay, so everybody says she can pretty much live a good life. Okay, so I'm excited.
She change her taxes.
Huh?
If she hadn't got with her taxes, what you just said, she's not that's not good money.
That's not good money? Come on, Dale. She's 30. She's making $65,000. She's driving a nice little Camry. She got a 2-bedroom apartment. You gotta have a 2-bedroom because 1 bedroom you'll sleep in. The other one maybe you're gonna use for office, or when some of these good girlfriends come to visit, you gotta have a place to stay. So okay. So everybody, we got 3-1.
Mississippi? Or where she live at?
No, she lives here in Atlanta.
Oh, okay.
All right.
Yeah.
So when
you can get me all this stuff, Tanya. I can't take that because you got her at 28% taxes. Where you got it right now?
We haven't even talked about no percentage.
Okay.
How you know that's for shit?
No, I'm just saying, I'm just asking. That's what you giving me that. You just going with the year, right? That's what she make.
Yeah, she just made.
You ain't did nothing yet.
I haven't done anything yet.
Okay.
I haven't done not one thing. Not one thing.
Yeah, right now it's a well. No.
Okay. So when we break it down, you guys, this is what she.
I don't think so.
This is what she brings home. So are we still in cahoots that right now this young lady she's doing okay? Like I said, I want this to be interactive, and what I'm doing right now is I'm getting ready to share. Okay, so by a show of hands, like I said, come off mute. She makes about $5,000 a month. All right. I went so much as this presentation. I wanted to make it a real life presentation. So right now, if you wanted to live in the Bixley Summerhill Apartments, which is located on Hank Aaron Drive, these are some kind of like mid-luxury apartments. When I looked at them, you guys, they were really, really nice. So pets allowed, fitness center, pool, dishwasher, refrigerator, So right now, as we said, what her rent was in the previous. So right, this is a real life situation. I told you she was driving a Camry. The Camry is about $35,000. So this is where I want to pause right now. This is where it gets real.
no,
This is where it gets real.
no.
So is it safe to say that car that we just saw, you see why I put it in the payment calculator, I haven't changed anything. This is real life. She
Yep.
went into her Camry. Right now, I didn't do best credit. I just gave her mid credit, which is between 660 and 719. And for the sake of her payments, we're going to finance it all the way out to the 72 months, which makes her car note for this Camry that she's driving about 621. I just did this Monday. This is real life scenario, right?
Yeah.
But she makes, what did we say she makes? $65,000.
Right.
Right, driving a Camry. All right. If you notice, this is nothing that Sandra made up. I said, Google, tell me how much would it be on an average Toyota Camry, 2024. It said about $21.96 a year. Still showing receipts, you guys. Stay with me. Make sure you take notes. So now, like Dale said, there are some things where when you break down the whole $65,000 a year, you want to look at right now, this is what her taxes would be. What I want you to do is go right where the 2-bedroom apartment is. Her rent is about $1,866. When we Google that size apartment, the utilities, which is electric or gas, water is about $200 a month. Cable internet about $153. Her cell phone is $150. On an average, if she's single, maybe about $100 a week. Matter of fact, stop right now. If you're single, matter of fact, Jade, I know you're in that age bracket. Is it safe to say is $100, is that accurate, or do you go a little bit over or a little bit under?
As of now, with inflated food prices, it's almost 2 times that amount. It just depends, especially on high quality ingredients.
Mm-hmm.
That's what I wanted to hear. So when I Googled this and I said only $100 a month, this is just not eating out. This is just her going to the grocery store every day for the 7 days. It's averaging about $100 per week. And then on the household products include your toothpaste, your laundry detergent, your bleach, the garbage bags, just everything that you would normally need for your household. That number is low. I don't know about y'all, but the last time I checked, when it comes down to laundry detergent, things, there's no way I can spend $50 a week. I don't know. So let's keep going. Cell phone, $150. We missed that. Health insurance, we want her to be healthy, right? So she works, so we would say 30 something every pay period. Life insurance, because anybody knows me, it's very important to have life insurance. We don't do GoFundMe and things over here. Her car insurance, we already talked about what would that be a month. And last but not least, that car note. So when we look at her whole entire expenses and we break it down, right now, y'all, look at this pie chart. This was astounding. Her rent right now is 38% of what she brings home. The taxes are 22%. I don't know about y'all, but guess what? Even when I looked that apartment up, everybody was telling me that there are some actual bad places in Atlanta that I can't get for $1,800.
Okay.
So this is we still stick with me, right? This is real life situation. What scares me the most is the 38% of her paycheck is going to rent. The other 22% is going to taxes.
Mm-hmm.
That's a lot of money. So when we look at all of these expenses, and Jay just said the grocery is a little low. The household, I did say, is a little low. Now, this is actually about $4,964.44 a month. Her gross pay was $5,000, y'all.
Mm-hmm.
The remaining she got is $63.56.
She's going paycheck to paycheck to live.
Yep. So what normally happens in a situation like this, matter of fact, like I said, I want you to come off camera and be interactive. And I hear you, Dale. I'm right here with you. In a situation like this, she's 30, y'all. So what normally happens is, guess what? She goes and do what? The one thing that we all are taught to do: go get a credit card.
Oh, I thought you were going to say
credit card, right?
Yeah.
So now the credit card will allow us now to kind of teeter-totter, like from paycheck to paycheck of what he just said. Because right now, $63, I never got gas. I got a car. It's a hybrid. However, I still got to get gas, right? And is it safe to say there's some other things I left off on this expense?
Entertainment.
Car maintenance.
Right. There are so many things. There are so many things. So let's keep going. Like I said, this is not going to be long, but it's getting interesting. You know, if it's getting interest, leave some fire emojis or leave something in the chat below. So now we just said her gross salary right now, $65,000. One of the things I want you to always, when you leave this Zoom, is every year the standard deduction is something different. Standard deduction. That means everybody get it. I don't care if you 0 or 100, you get a standard deduction. So although her salary is $65,364, she gets a standard deduction, which is $14,600. So the way it looks under the tax side, the tax bracket side, if she's making $65,000 less the standard deduction, her taxable income becomes $50,000. So if you notice on the slide right there, her taxable now income that's due, that's payable at the end of the year is about $6,000. $6,000. She made $65,000, but according to this, she owes $6,000. Remember the calculation? So the calculation said what she accurately put on her W-4, she has $64,000 on her W-2. The IRS says you owe $64.78. Guess what? At the end of the year, she's still underreported. And like Jay said, she hasn't done any type of entertainment. She hasn't got any maintenance. She hasn't done any of the other things that even everyday living is not balling for you falling that I just need to survive. So at the end, when she comes to me, she still owes $17.71. I don't know about y'all, but if we're not teaching the tax planning, tax preparation side of what we're doing, how are we ever going to get out of this cycle, right? So what does it look like? Okay, you're here because you want to hear and learn about some mid-year strategies that maybe you can utilize in your daily life. So if we're using Kimberly, for instance, what strategies to save Kimberly money? Okay, right now the government is giving her 6 strategies that say you can itemize, right? It's saying that she can itemize. It's giving her 6 things. We're not going to go over these. However, the catch all is if all these things that she's itemizing does not add up to $14,600, she don't even get to use them. So when I hear people say, I'm donating to the Salvation Army, I'm donating to Goodwill, I'm donating, honestly, this is the one that kind of hurts a little bit, is when I give my tithes and offering to church.
Yeah.
So if your tithe and offering plus any of these other things don't add up to $14,000, we take the standard deduction and all that money that you really donated doesn't count. I want to come off camera for that. I want y'all to look me in my face. For real. I have so many clients that come to me. Let me grab a sheet of paper and they're excited. I got my giveaways. I got my stuff I gave to Goodwill and If they don't add up to that $14,600 that we just talked about, guess what? I tuck it away, staple it to their report and keep moving. So are there ways now that I can literally give things and now feel good about them? Absolutely. Stay tuned. We're moving right along. So the next thing what I want to do is I want to discuss the tax credit. Remember, you're here for the strategies. So the other ones is what the US, the IRS gives you. Now, here's some tax credits. Matter of fact, what I want to do, let me go back. Okay, medical and dental expenses. If she was pretty much healthy last year, don't qualify. State and local taxes, don't qualify. If she don't own a home, don't qualify. If she gave $200, $300, $400, $500 here and there, still don't qualify. Casualty and death losses, if she didn't have any of those, don't qualify. And then there are some miscellaneous deductions that are really so miscellaneous we're not going to talk. So right now, her best out right now is only the standard deduction. So tax credit, earned income tax credit. This is small. They do give a small amount for single with no kids. However, the big money that we're talking right now, which comes from the child tax credit, remember, she don't have any kids. Child dependent care, she don't have any kids. American Opportunity, she ain't in school. Lifetime Learning, she's not in school. Adoption, what? I got $64 at the end of the year. I can't adopt a cat right now. Energy tax credit. Right now, I'm not installing no type of solar things in nobody's apartment. Foreign tax credit right now, of course, she's not doing any type of investing in any type of foreign money. Credit for the elderly or disabled. We just said she was 30, y'all. Savers credit. This credit right now is based on any type of retirement and things like that. And the last one is electric vehicle tax credit. She has a Toyota hybrid, but is not fully electric. So right now, none of these credits apply. None of them. Go ahead, Dr. Turner, I see your hand.
If you let me in, I'm on another device. My phone is dying.
Absolutely.
Thank you.
Absolutely. Absolutely.
But go over that one strategy. You said that if she didn't have all those strategies, didn't add up to 14,000, so she couldn't deduct none of her medical, any of that?
Nope. Now, if the medical is above, the only time you can actually do, let's go back to this because she had this question. On this standard deduction, let's just say you had medical expenses that were $20,000 plus anything over 14,600 now accumulates this. So we're talking about her particular, she's 30. We never said that she had any type of ailments or anything like that. So the part of each individual, and I'm going to get to this, everybody's tax situation is not the same. That is why you want to do, this is the part that you missed. That is why you want to meet with a tax planner, because the planner is going to now be able to now design a plan now that actually meets what you need for your particular tax situation.
Okay.
All right. Absolutely. So now we talked about these tax credits. Right now, Kimberly doesn't apply for any of this. So this is the part that, hold on. This is the part that we just talked about, the tax planning, right? So this is what she needs, because right now, is it clearly say that $64, she can't live off that?
Nope. Not even a day.
Right. All right. So the tax planning part says, what can she do? Right now, do y'all realize there's a hidden thing in America where now, if you own a small business, you're eligible now, not those 20 deductions that right now she doesn't apply for. You can get up to 400 tax deduction of just having a small business. Not just any kind of small business right now. You don't automatically qualify for this. Of course, there's some planning. You got to meet with somebody. And then it depends on your personal goals. And these personal goals, if you're attempting to buy a house and things like that, some of these rules right now, you have to literally sit down with your planner. But the part of knowing what to actually be able to get the legal tax credits, deduction, this is why you're here. This is mid strategy. So what we did was we Googled, what are some of the top 10 business deduction? It doesn't say you have to have a Fortune 500 company. It's just said you have to have a business. There are criteria, which the next probably Zoom, we're going to go over some of the criteria that must meet the IRS. You just can't go out and say, okay, I'm doing hair in the bottom of the kitchen. And no, that doesn't work like that. So these top 10 business deductions, I want you to stop right now. Take a screenshot of these. This is very, very important. These are the top 10. When I tell you, I probably don't even have to do 2 or 3 right now because I've been doing it so long. However, on these top 10, what I want you to do is keep looking, because let's break down right now. Kimberly, the $65,000 salary, we said she get the standard deduction, right? Her taxable income is $50,000. So now this is where it gets good. Everything you see up here is what we talked about earlier. Her cell phone, check, it was on there. Her car insurance, check, is on there. Car, this is the difference, $20,000. I'm coming back to that. Cable and internet, she was paying for that anyway. Meals, what we did was we took 50% of what that number was, because there may be some that qualify, doesn't. These are just estimate. Last but not least, when you think on the supply side of it is now that household where maybe we can tweak some of those numbers. All of these are basic estimates. So go back, like I told you, on the car, which is $20,200, that is called depreciation. That is when you need to get with your planner. I know here's all these questions. Should I finance? Should I lease? I own my car. How can I get business expense write-offs? That is when you have to meet with someone of my nature, and we sit down with you. And now, once again, we determine whether or not which best fit your needs. However, for Kimberly right now, that's a brand new car. This year that she needs it, we're going to go ahead and depreciate it. So if I depreciate it right now, I'm able to deduct now the $27,000 from the 50, which makes her taxable income now only $22,000.
Oh, wow.
Yes, only $22,000. Now taxes that are due is $25,919. Remember, she already paid this on her W-2 because they take it out her check, which is $6,000. She has a refund now, $37,41.29.
Right.
Right.
Wow.
Now, I don't know about y'all. That's not a whole lot of money. It's not a whole lot of money. But what I want you to do is now, matter of fact, let me come off because I want you to see my face on here. When you leave this Zoom, I do not want you to get excited about refunds. The excitement here is when you properly plan with me, we get excited about having to owe zero. Because during those 12 months, the money that you're loaning the IRS, the money that you're giving them, there are so many strategic ways of us going to sleep every night and allowing your money to do what? Make money. So if you're pinged in with the proper person that's doing these planning, then guess what? You're able to allow your money to make money. So if your money is making money while you sleep, that's good. Is it safe to say, matter of fact, come off mute. Is $3,700 a lot of money though, for real?
Nope.
Yes, if you don't have it.
Yeah.
Maybe 2 months of rent.
Somebody said yes, somebody said no.
2 months of rent.
Chunk. That's a little chunk of money, you know.
Yeah.
Okay.
Depends on what you
Okay.
use it for. Depends on what you use it
Right.
Stay tuned. Stay tuned. This is getting gooder and gooder. I love it. I love the conversation. I love the conversation.
Use it.
Keep talking back to me. Keep talking back to me.
If it can grow, yeah, it's worth it.
All
Because
right.
it's $1,000. It
All
still
right.
can grow. Yeah.
So what I want you to do is, if I took that $3,700, remind you, this is something that's going to happen reoccurring over and over unless you talk to somebody, right? So what we do is, once you sit down and you plan with the proper person, we're going to take that money and we're going to invest it for you. And all I did was just took that $3,700. Is it safe to say once you're on your job for 5 years, you're going to get a raise? 10 years, you're going to get a raise. 15 years, you're going to get a raise. Or the more you're in your career, when you get ready to apply for different jobs,
anything yet. I'm not.
Mute your phone.
when you actually get ready to apply for different jobs, guess what? Your actual experience, your money is gonna go up. So what I did was kind of like a not really good thing, because I left her at the $3,700. Let's just say if she never met me and she stayed at this good job for 15 years, I want you to particularly look at the year 15, and I want you to look at 2 columns right now. The first one where it says cash value, and the last one that say death benefit. Before we look at that, matter of fact, go back up to year 1. Go back up to year 1. So if she came to me and she said, I do have a refund, I'm excited, and I invested it for her, If she passed away in that first year, she has a death benefit of $100,000.
Mm-hmm.
She wasn't going to use the $3,700 to borrow for your phone because she came to me for advice. So the thing is, that's why I said we don't want to leave our monies where it is, because there are so many investment tools that you can put it away where now your money is making money. Dr. Regina, you're talking back to me. What I want you to do is in year 5, look at that $15,586. That says cash value.
Right.
That money now that if she decides she want to buy a house in 5 years, guess what, you guys? That's a down payment. No tax penalties, no interest, no nothing, because that's her money. And then if she passed away still after buying this nice house, she still has a death benefit of $118,000. So what I want to leave you guys with is money is a great servant, but a bad master. If invested wisely, your money works for you, creating more money in ways that you barely have to manage. The problem of this is, and I do have one more slide to share before I want to come off camera. If you're not talking to someone, and this is one of the things we always say on a monthly basis, quarterly basis, semi-annually basis about anything in your individual life or your business life, then guess what? Those opportunities that I just shared with you, Dale, like Dale just said, the $3,700 can or cannot. What I want to do is, matter of fact, while I'm actually sharing this, let's go back. I want to do something right now. Let me know if you can see my screen, and I want to go right here. I don't want to go back to this slide. I want to go back to this one because this is the one that means the most. If she never invested time to speak with someone on a planning side, don't look at it as the $3,700 was spent. I want you to look at it in year 15, $85,000 was lost.
Mm-hmm.
Because now there's no bank. There is no money to borrow from. That part. Yeah. So with those of you, you're saying, okay, during this time, we see it. We see this way, this time of the year, the restaurants are full, the malls are full, and they are spending crazy. And when I tell you $3,700 is really on the low end for the people that doing January through April that are spending, very low. I would say that's very low. These refunds, we're talking like $6,000-$7,000. So imagine you're looking at that $3,000 growing in the year 5 of having $15,000. Imagine if you took $7,000 or $8,000 or $9,000. So the part of it is, you guys, knowing that there are other resources, and the main part of this is having that W-2. Matter of fact, let me stop here. Matter of fact, let's do this interactive. How many of you guys that were in school that knew people that one person in the family worked, but the other person may sold like Tupperware, may have sold like Avon, may have sold like cookies at the soccer game? Do y'all realize, although her husband was in corporate America making 6 figures, making all this money, by her pairing her Avon business with him and filing as a joint tax return, look at the tax deduction they got. So when you're talking about now, what are we doing? How are we doing it? Some of the things that I'm telling you have been around for years and years, but you have not heard it from the right person. So the part of having some mid-year tax strategies, you have to have a home-based business, a business to pair, because what it does, it gives you now that window that we showed, 400 plus tax deductions. When really without that, you only had what, 20. And when we were going over the numbers, the young lady was so young, she didn't have kids. So none of them applied to her. So if this information has been very, very useful, it's information that you can use, information you want to share with any of your friends, family, coworkers, and anything like that. I'm always offering a 20-minute free consultation. The number and everything is on the actual screen. And for you guys that have already joined, that are actually already a part of Certified Platinum Financial Services, you need to use this number as well, because guess what? It's a new year. So if we have not talked for 2024, and I have not now done any planning for you, you're 7 months behind. So what are you waiting on? Let's get into it. That is actually the end of the presentation. I want to actually leave a few minutes. I ended early. For any questions, anything you want to ask or anything like that. And definitely, let's talk.
Question. Excuse me. Peace and blessings, everybody. Dr. Regina A. Turner. Say, for instance, both husband and wife have a home-based business, but the husband is still working. Would it be advisable for both of them to still file jointly, especially if she has hospital bills, doctor bills that she's paying, and both of them are seniors?
So what you would do is, normally you would, now let's use this one word that we keep using. You want to meet with the tax planner, because the planner is going to be able to now design something that's especially for the two of you guys, or whoever the person you're actually mentioning. Because right now I can't answer it until we sit down and look at everything you're doing. And I can tell you the first part of it is the realization of the screen is actually went black. You know how we sat down with Kimberly and we sat down and actually put everything in her expenses on a spreadsheet. So once we look at everything that you're spending, we're able to now to look at that bucket where where we had that pie chart, and we can look at 22% is going here, 32% is going here, and actually be able to see what you're spending, where's the money going, and then determine it from there.
Okay, thank you.
Yep. So the good thing is about it, do you want the 20 some credit tax deduction, or do you want the 400 plus tax deduction? You know, there are levels.
Another question. If you're retired and you don't have to file taxes, do you still have to file taxes?
It depends on your taxable income. I have 4 young ladies that were teachers that make very, very good. They come and see me every year because they didn't do the proper planning, that even in retirement, their Uncle Sam has his hand out.
Okay.
That taxable income is something, that taxable income pops up with it. It's amazing how it comes. You gotta be able to know it. And the thing about it is the education side of knowing what you're doing, where you're spending. If you're not picking up the phone, calling whoever the person is that you're working with. I tell people all day, every day, if you're working with somebody who's only open between January and April, what happens through the rest of the months? Do I leave them a voicemail? Do I send them an email? Like what happens? You know, I don't understand that part of it.
So Sandra, like Georgia, with you retired and you own rental properties, you sell that rental property and it's over 250, that's considered like taxable income, correct?
Absolutely.
That's like an example. Okay. All right. I'm just trying to clarify.
However, we have a membership where if you meet with the right people, although that may become a capital gain, there's a way to shift that money and it's not taxable. You just got to meet and talk and plan it out.
Yeah. Okay.
Yep.
Yeah.
So what I want to do is, before we get too long, and I want to honor everybody that actually showed up. If you were invited by someone here, get back with the person that invited you, because they have some information I know can add to your situation. And when I say add, there could be money that you're actually using for bills and they're not expenses. So without further ado, I'm going to go ahead. Mr. Ponder, I want to thank you for co-hosting with me. This has been an amazing webinar. I definitely know there's a part 2. So if you're not following me right now on social media, what you're doing? You should be. I'm there. I'm actually go ahead. I'm actually on Facebook it's actually the whole company spelled out, Certified Platinum Financial Services. We're actually on social media, Instagram as well, and it's at CPF Services on Instagram. So once again, I thank everybody for joining me. I have so much knowledge, you guys. Definitely when you see me post anything that is actually in any of the social medias, thing like that, follow me. And make sure you book that free 20-minute discovery call so we can sit down and figure out what you're doing. So without that, I want to thank you guys, everybody, for joining, and good night. Bye.
Awesome.
Thanks.
Thank you.
You're welcome. Bye.
Bye.
Bye.